So thank you for joining. We're going straight into business. The reason why we're here. I'm gonna be sharing my screen in a moment. Let me know if you can see my screen. Give me a thumbs up if you can see. Is it on presentation? It is now, right? Am I muted? Okay, I'm not muted. Okay, so you guys can hear me. All right, we're gonna be starting right away. If you're just meeting me for the first time, my name is Okiemute Kimberly Sagwa. I have over 20 years experience in the finance industry, particularly treasury, corporate finance, and personal wealth management. And I'm passionate about helping people build wealth that lasts, right? Regardless of what you do, where you live, how much you earn, I want to show you that it's possible, what is possible. And the thing is that whatever wealth means to you, sometimes it's more than just money. At least that's for me. Wealth is not just money. It's about every aspect of your life. And that's why I set up the community, Thrive with Okiemute, where the goal is to empower professionals, business people, and Nigerians all over the world on how to live intentionally and thrive fully. Like I said, beyond finances, we look into wealth, wellness, our lifestyle, and every aspect of our lives, really. And then that's why we set up this first ever webinar for the community, and it's called Your Money, Your Terms. We'll be going straight into business. I'll walk you through what we're going to be learning today. Six key things we're going to be learning, right? Developing the right money mindsets. That's essential. And then how to calculate and track your net worth. And then treating expenses or money that you spend the right way. And then we're going to be doing something called MMM, but not the one you know. This one talks about making money, managing money, and multiplying that money. And then building a simple portfolio. How do you even go about doing that? And then key areas to focus on in the coming years. And also we'll do a bit of goal setting and taking action. Before we go right into it, let's take our first poll. We're going to take a quick, okay, no, not yet. I think we'll look at, I have a little question for you. Right. What if your money has been living on someone else's terms? Like, right? Has society been the one dictating how your money lives? Or is it the bills that you're faced with? Or is it your expectations? Or even your family's expectations? Or fear? Or is it anxiety? Today, we are changing that script, right? And you on the call, everybody on the call, you're going to take back control of your money. But before that, let's take a short poll on mindset. Give a thumbs up if you can see the poll on the screen yet. Yes, 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 yes. So when you hear the word mindset, what's the first emotion that comes to mind? Please join and take the poll. Is it anxiety? Is it motivation? Or is it indifference? Is it confusion? Or is it excitement? Whichever it is for you, just pick it. The poll will be closing shortly. It's just a quick poll. We have 5 seconds. 5, 4, 3, 2, and 1. We're closing our poll. Ooh, most people say motivation, excitement, fantastic. Then my work is easy then. Only a few people have anxiety. Okay, we're gonna deal with that anxiety as well. But I'm happy that we are getting more of positive. So it means more of us, most of us on the call already have the right mindset. But for those of us that don't, or even if you do, you can still improve your money mindset. So we're going to be delving into the mindset shift, right? What's the right type of mindset to have to build wealth? Money mindset is just the beliefs and the attitudes that you hold about money. And most times this has been shaped from childhood, right? Your upbringing, your environment, where you grew up, the things you heard growing up. What were you taught about money? Did you believe that money is hard to get, or do you believe that it flows easily to you? Do you feel guilty about spending or receiving money? If you have any of these negative mindsets, I know for me, I used to hear things like, oh, money doesn't grow on trees, or rich people are greedy, we don't want to be like them, or you don't need too much to survive, just have enough and be content, take care of your family. But how can you really impact humanity if you don't have wealth? Think about it, right? You need wealth to be able to do a lot of good in this world, except you're just focused on yourself. But if you want to help, you need money. So you need to create an abundance mindset. So we'll be talking about replacing scarcity with abundance by reframing our thoughts. So things like there's never enough. No, you should replace that with there is more than enough and I can create value. You are capable of creating value. Or I'll never be rich. No, you replace that with wealth is a skill and I can learn and grow, right? The people that you see making wealth, they didn't just know it. Some of them learned it and you too can learn it. Money causes stress. Money is a tool that I can use wisely. So having the right mindset is the first foundation. For you to be wealthy, you have to be wealthy in your mind first before you can see it in real life, right? Um, and then this takes us into evaluating your current financial standing, base level. Where are you right now? After developing the right mindset, you assess your situation. Where are you? What is your net worth? I know when a lot of us hear net worth, we're like, that's for the extremely wealthy, people on Forbes list. But no, it's for everybody. What do you own? And what do you owe? What's the difference? That's the simple way to get your net worth, right? And if you don't focus on this, if you don't track it, then how do you grow it? So we'll just take a little, okay, no, before that, I'll show you just a template of how you can calculate your net worth. You can just list all your assets just like it is here. This list is obviously not exhaustive. So whatever applies to you in your own situation, you list it out, put the value, the same thing for liabilities, the things that you owe, the things that you own, all of that, and then you get the difference. Some people might say, but what if I don't even own any assets? No problem. Put zero there. But it means that you are in a very good place. You are starting even on a blank sheet and you're going to be starting with the right knowledge. So it's still fantastic. Let's just take another quick poll before we continue. Yes. So on a scale of 1 to 10, how aware are you of your current net worth? 1 to 3, I've never calculated it. 4 to 6, I have a rough idea. 7 to 9, I check it now and then. And then 10, I track it regularly. So where do you fall in this spectrum? Just pick one. We have 5 seconds more. 5, 4, 3, 2, and 1. I'll be closing the poll now. Let's see our results. Ooh, so most of us have a rough idea. So what this tells me, okay, we have a 31% that says they've never calculated it. 50% you have a rough idea. 19% you check it now and then. And 0 says they track it regularly. That is going to change from now. All of us are going to move to tracking it regularly. Rough idea is not good enough. It means you haven't put it down either to paper or to your Excel sheet or to your phone app, whichever one you want to use. You need to document, you need to track it and put it down. And we'll see the importance of that as we go along on the webinar. So we can take down this poll now. And so on a scale of 1 to 10, how happy are you with your current net worth? You need to ask yourself that question. And the truth is that there's no good or bad answer, right? It's all about awareness because that is the first step to change, right? If you're not aware of something, how do you then improve on it? So now that you know where you are, you can then determine where you want to be and then of course create a plan of how to get there. The main idea of wealth creation is increasing the assets, get more and more of assets, right? This section, more and more, less of this, so that this can be maximized. It's that simple. That's the simple wealth equation. Although we're going to get deeper into it. Let's take another quick poll before we continue. This is a quiz now. We're going to be taking a quiz on assets. Yes, which of these is not an income generating asset? First one there is dividend paying stocks. Second one, rental property, then your car or a business that generates daily sales for you. Let's take a quick quiz. 5 seconds. 5, 4, 3, 2, and 1. So let's see what our answers are. Yeah, hey, you guys are smart. Are you sure you need my class? The way I see it, everybody already has the answers. You are absolutely correct, right? Except you are using your car for business, then your car becomes an income generating asset. So that's why I put it there because it's a trick question, right? If you are using your car for your daily movement utility and it's not bringing in any revenue for you, then of course it's not. It's an asset, quite all right, but it's not an income generating asset. So that's why we move into what's the fastest way to financial freedom. It's about getting assets that give you cash flow or assets that are appreciating in nature, that have the potential to increase in value over time. Right. So it's not just any asset. When we calculated our net worth, we just said list all your assets, list all your liabilities. But now we're going deeper to say no, we want to build real wealth. So it's not just about any asset. It's about assets that can give us cash flow, real estate. If you buy a house, land, or whatever it is, and you can, it's going to, that the value is going to grow over time. It's going to increase your net worth at the end of the day, or it's going to pay you income. If you have a business, if you invest your money in a business, it's going to give you income that will increase your net worth. If you buy stocks of companies like that are doing well, that are going to grow, they are going to pay you dividends. Some will pay you dividends, or some will just appreciate in value, going to increase your net worth. Fixed income securities, we'll learn more about that as we go along. Intellectual property, you write a book or you create an online course or whatever, or precious metals like your jewelry, gold, platinum, if you are into those things, or art appreciates in value, or any other asset really that has the potential to appreciate in value or to give you steady cash flows in the future. So we should prioritize earning those assets or obtaining those assets while we do less of the liabilities or the depreciating assets like your cars, your clothes, your bills, your gadgets, your vacation. I'm not saying you shouldn't enjoy life, oh, please enjoy life. But the thing is, what is the proportion of your money that is going into these areas? Let's take another quick quiz, this time on seed versus bread. So let's just see that quick quiz now. Is it up on the screen? Yay, yes. If you receive 100K right now, as we are on this call right now, or if you are in the abroad, 100, put your own currency there. If you receive it right now, how would you allocate it? Would you spend 100% on it on your needs? Or would you do 50-50, 50% on needs, 50% on savings? Or is it 70-30, 70 on needs, 30 on investments? Or you say, I need to learn how to allocate properly. I'm not even sure what I want to do. What is it? I think we can close the poll now. It's a quick one. Let's see our responses. Okay, we have a fair, most people, 42% of us say 50-50, 26% say 70-30, and 26 say I need to learn. And then there's 5% that says 100% on needs, man. I don't have time. So, but this is good. It shows that, we have a spectrum of people here. And by the time we are done with this call, I think we'll have more clarity on how to allocate our assets. So now moving right into the right way to treat expenses. We have the expense to asset swap and we have the seed versus bread, right? Expense to assets swap just simply says when you spend money, does the money disappear? Or do you spend it on something that comes back to you in form of an asset? While the seed versus bread said, do you spend it on something that you are planting that will generate money for you later? Or are you spending it in something you are consuming today and will never come back to you? These are the questions that are critical if you are serious about building wealth. Learn to practice the expense to asset swap. Put some of your money in assets that will come back to you, or in form of money or appreciation in value, or plant it in an investment that will yield fruit tomorrow. So do not spend tomorrow's income today by eating everything as bread. Ensure you reinvest some of it as seed. For starters, if you are new to this, you can say, okay, I'll do 75, 15, and 10. What does that mean? I'll spend 75 to take care of myself, 75% of whatever I earn, take care of myself. And I can put 15% in some kind of investment, which we'll talk about, and then 10% maybe in savings. It's just a rough idea. But the more you can put in investments and savings, the more and faster likely you are to create wealth over time. Choose whatever ratio or percentage works for you. But what is most important is consistency. The amount, not as important as consistency. Have a plan in place to allocate your money before you earn it. Practice the own first, then spend later mentality so that you can retain as much as possible of what you earn and convert it into assets that can make money for you over time. That's how you generate passive income and then you grow wealth in the long run. And then we move straight into building a solid structure, right? Now that you have the right mindset, you've calculated your net worth, you have the right view on how to allocate your expenses. How do you then build a solid structure? The DNA of financial freedom is passive income, right? Don't treat all your money the same way. Every money that comes to you has different purposes and they should be categorized separately. Someone said that you shouldn't fall into the one pot trap. A lot of us earn revenue on, in an account. Maybe you work in a job and your salary gets paid into one account, or you run a business and your sales or your revenue goes into an account, and you just leave it there and start spending from there. And you spend. Then whatever is left is what you now say, what can I invest or what can I put away? No. you have to build a structure first of how you're going to allocate those monies even before they come. And for a beginner, you start with your foundation account. At this point, you are thinking emergency fund because it's new to you. You don't want something that will throw you off balance, right? So you want to be sure you have like a safety net in case of emergency. You have something to fall back on. So you can compute 6 months living expenses. How much does that come to? What will it cost you to survive for 6 months? You can do more if you are more comfortable, but rule of thumb, you can say 6 months, and then start putting that money aside. Put it there just to give you some comfort to then progress to the next stage of the growth account where you are now thinking investment and active wealth building, right? And at this stage, you are allocating more funds into income generating assets as we have already discussed before. And then the third stage is your legacy account where you are thinking generational wealth and impact. At this time, you are saying, okay, I've built some money or I'm going to build some money. When I do, what's going to happen to it? How is it going to run? How is it going to be structured? And how is it going to be transferred from one generation to another? You might say, oh no, my money is not enough. I don't need it. But that's why you're in this class. Now your money is going to become enough. So you have to plan for how that money, you think things like wills, trust, donor accounts, there are lots of structures out there. And in subsequent webinars, right, we're going to go into detail into some of these things on how to build the right structure. This is just a foundation for now. So then creating a money system that works for you. This is the MMM we spoke about. Make money, manage money, multiply money. You have to increase your earning capability. What can you do? What can you exchange for money? What knowledge do you have? What skills do you have? Don't just rely on one stream of income. You have to create multiple streams of income and then get to the stage where you can earn money every day. I had to key into my coaches. I recently joined the coaching program for Grace Offering. I'm sure if you've been following me, you would know. And she has taught me the concept of earning money every day, right? You have to build assets. You have to do things that will make you earn money every day. Don't rely just on one paycheck or one business. If something goes wrong with that job or something goes wrong with that business, what happens to you? And also it limits you because it puts a cap, a ceiling on what you can earn. Okay, my salary is 100K. And then that's when you start saying, I cannot save, I cannot invest. But if you do more things, if you create ideas, there's content creation these days, there's affiliate marketing, there are remote job opportunities, there's commodities trading, there's e-commerce. There's so much one can do to earn money on the side and increase your earning capability so that money doesn't become stress for you. What then becomes stress is what you do with it. Like that song that said, too much money, problem is how to spend it. We want to have that kind of problem. Then we move into the managing money segment where we are looking at optimizing how we utilize and allocate the money. Practice delayed gratification. Very important. You want something now, must you get it now? How important, how urgent is it? Can it wait? Can you put that money into an investment that yields something? I was talking to a client the other day and she said that, oh, I would like to go for a vacation at so time, but I want to invest this money now. And it's the proceeds from the investment I'm going to use for the vacation. She asked me, help me calculate how much I would need to put aside now so that the proceeds can pay for my vacation. That is somebody that doesn't want to eat her seed as bread, right? You plant it, it germinates something, and then you can take from there. You don't even take all the returns. You take part of it and then you reinvest part of the return so that you can benefit from compounding. We'll talk more about compounding later. And then never leave money idle in your account. It's a sin. You will be like that one is it servant that the master gave. I don't know how many of us are Christians, but the story in the Bible where the master gave them coins, right? One, he gave one talents, one, he gave another one 5, gave another one 10. Don't be like that one that they gave one and said, because it's only one, I'll go and bury it in the ground so that nothing will happen to it. No, now that's like keeping money idle. No, make sure you put that money to work so that you can multiply it. It becomes 2. Before you know, it becomes 4. Like that. That's how you grow. If you leave money idle, like I said, world people, family people, friend people, everybody will come up with needs to use that money for you. And at the end of the day, you say, I don't know where my money goes. It's because you left money idle. There's also inflation that erodes money that is not earning anything. So you have to ensure your money is not idle. Then track your expenses, budgeting, very important. Plan ahead. Don't wait to spend before you plan. Debt management. Debt is loans, right? A lot of us fear debt because we don't understand it and we don't know how to use it. If you don't understand debt, I would say, please don't touch it. But if you do, debt can make you a billionaire. I always give the example of Uncle Alaji Aliko Dangote. I'm sure he's the biggest borrower in the country, but he's also the most productive because he knows how to use money to create value for people, to solve problems in the economy and make himself a billionaire. That's why he's the richest man in Africa, the richest black man alive, right? And I aspire to be like him. I won't lie, So if you know how to use debt, there's good debt, there's bad debt. If you use debt to go and fund loud spending, luxurious lifestyle, then you've missed it already, because you have to work back to pay back the loan on something you did not earn anything on. But if you use debt for something that is going to create value for you, such that you are able to pay back the loan plus whatever interest and still have extra. For example, I take a loan of, let's say, how much do they sell her hair now? Is it 500K or 100K or 1 million? I don't know. I take a loan and I use it to buy this hair. Nothing is going to come back to me from this hair. So this money is gone. It has left my net worth. It has left me. Fine, I look beautiful, but has it added to my net worth in any way? No. But if I take that money and I say I'm going to buy hairs that I'm going to sell on Instagram, by the time I sell it, I make a margin on top. I'll pay back the loan and then I make profits. You've created money from nothing. You didn't have money. You borrowed. You used it to set up a business and then you sold and then you've created money. So I spent a bit of time here on debt because I don't want us to be stigmatized about debt. It's knowing how to use it. What are you taking the debt for? You can take debt to buy stocks. Most stockbrokers give what they call margin loans, right? So if you already have stocks in companies, you can use that to get more, what they call it leverage, right? You get more, you buy more of those stocks. But if you know what you're doing, you have to understand stocks. It's not just any stock you buy. In subsequent webinars, we'll go into detail on how to analyze, how to get stocks and all of that. But this is just, like I said, a foundation. Then automate your savings and investments account, right? Then multiplying your money, which is the good problem I said we need to have. You first of all, you make the money, you manage it well, and then you multiply it. Choose investment vehicles that suit your goals, your risk appetite, and that can help you beat inflation. We'll talk more about risk appetite in the coming slides as well. So you at this stage, you're focused on aggressive wealth growth, but with risk management in mind, because you don't want to lose all your money, and also diversification, that is spreading your investment across different asset classes. You don't want to put all your eggs in one basket. Retirement and estate planning. Retirement planning is simply planning for your life after you stop working, after active service, when you are no longer able to do all the hustle you are doing now. What are you going to fall back on? What is going to sustain your lifestyle? Are you going to be dependent on people, whether your children, whether your relatives, friends? You don't want to be that person when you had the opportunity to create wealth that will sustain you at that time. So having the right retirement plan is very important. And then estate plan is just talking about the wills and trusts and those kind of structure that I spoke about earlier. Then choosing the right investments. I said you have to understand your objective. Why are you investing? Is it a specific goal you want to achieve? You want to buy a house? You want to go to school or send your child to school in 10 years. I had a client who wanted to send their child to school in 10 years. I will draw up a plan on what you need to put aside now and what you are going to be adding to it consistently over time, right? So that at that time you have an investment that will be paying the fees. So that investment is already secured and the returns or the cash flow from that investment is what is paying the fee. So depending on the goal and what you want to achieve is what will determine the type of investments you choose. Then understanding your risk appetite. Risk just means that when you invest in this thing, the outcome may be different from what you expect, right? So you could lose part of your money. I know most of us don't want to hear loss, but it's real when you are dealing with investment. So you have to understand it. Are you low risk, moderate risk, or high risk? You need to know, because that will determine the type of investments that are suitable for you. And then what is your knowledge level? What do you understand about investing? Because you should only invest in what you understand. Don't throw your money away. Don't follow get rich quick schemes and lose all your money. So some investment vehicles, we have high yield savings, fixed deposit, mutual funds. Mutual funds is just a pool of funds that is managed by a licensed fund manager, licensed by the Security and Exchange Commission in your jurisdiction. In Nigeria, that's SEC, right? Security and Exchange Commission. And then ETFs are like mutual funds, but they are traded on an exchange. And then you have things like treasury bills, commercial papers, and bonds. These are instruments that are companies or governments use to borrow money. So you are lending money to them and they promised you a fixed return. And then you have stocks, shares, commodities. You can trade and make money. You can buy and invest long term also and make money. Then you have real estate. Real estate, of course, we are all familiar, housing, land, whatever it is, but do it with knowledge. Make sure you find out about before you continue. And then you can consider REITs if you don't have enough capital, because real estate is often capital intensive, right? So the real estate investment trust that exists where you can buy a fraction of a full real estate property, and that way you can still get access to that investment space. And then you have cryptocurrencies, which have now come to stay. You need a lot of knowledge about this before you go in, and you should only allocate a small percentage of your portfolio to start with if you choose to go ahead with that. And then you have private equity and private credit, right? So I want to talk a bit about compounding, the magic of compounding, which is one of the greatest forces in life, according to Warren Buffett and some other big time investors, right? The only thing is that it requires time, and everything in life it applies to everything in life and not just money, right? So to briefly explain compounding, you can imagine if you invest 100K today, let's say the interest rate you get is 20% for 1 year. At the end of 1 year, you have 120K, right? At the end of that 1 year, you take out the interest of 20K and you reinvest 100K back. At the end of the next year, you're still going to have 120K. And if you keep doing that, your money never increases in value. But if you take that 100K, you get 120K. At the end of 1 year, you invest 120K. The next year, you're going to have 144K. If you invest that 144K, the next year, you're going to have 172K. And then the next year, 207K. And the next year, 250K. And so on and so forth. So that is the magic of compounding. So one person here, Chinedu, had the 100K. Emeka had 100K. Both of them had 100K. But Chinedu kept eating his own interest, but he didn't touch his principal, and he felt he was doing good. At least I did not eat the principal, I kept it. But Emeka, on the other hand, reinvested all his interest. By the end of 5 years, Chinedu will still have his 100K. He has not moved from where he is. Emeka now has 250K. Are they still on the same level? And you can imagine if it's 1 million to 2.5 million or 10 million to 25 million. That's how the magic of compounding works, right? So if you reinvest your interest, you invest your returns. If it's stocks, you reinvest the dividends. If it's rentals from your property, you reinvest them. That way you are growing your net worth over time. And then simple investment portfolio here is I said we're going to talk more about risk appetite in a subsequent slide. That's where this comes in. You have like a spectrum of risk. You have somebody who is risk averse, someone who is risk neutral, or someone who is a risk taker. So that's where you have the low risk, the moderate risk, and the high or aggressive risk, right? So you have to know where you stand in this spectrum, in this range, right? Depending on your age as well, age is very critical. So some people say you should use the age rule as a guide. If you are a beginner, if you don't really understand how these things work, your age can guide you. They tell you something like, take your age out of 100, right? Let's assume you are 30 years old. You take 30 out of 100, that means 70. It means you can afford to put 70% of your portfolio in assets that are a bit more risky. And why is that? It's because if something goes wrong and you lose your money, you have time to recover. But by the time you are in your midlife, let's say you are 50, if you take 100 from 50, you just have 50, right? So you can balance it 50-50. And then the older you get, the less risk you should take. So we can see that we have fixed income instruments, which are the relatively safe ones. Then we have equity. Oh, let me use my pointer. You have fixed income, which are the relatively safe investments. Then you have equity or alternative investments, which are more risky. For fixed income, you have the things like the mutual funds, the fixed deposit, the bonds, treasury bills, and commercial papers. These have a lot less risk because your principal at least is guaranteed. The only thing you lose is the income, the interest on it can go up or come down, but your principal is secure. But for this side, your principal can go if the value of the asset goes down or goes up, right? So you should put only a little percentage of this in this section if you are risk averse, and put more percentage here if you are risk if you're a risk taker. So that's just what this slide speaks about, and you can reach out to us if you want to discuss this further, if you want to know more about how to build a portfolio that will balance your risk and your returns properly. And then this is just like on the side, some key investment areas you can focus on in the next 3 to 5 years, right? The first one is emerging markets, which is where we are. We have Africa, Southeast Asia. Those are the emerging markets. They are referred to as the frontiers of world because they are projected to grow. Their population is projected to grow. And then I read somewhere that 6 out of the 10 fastest growing economies in the world are going to be from Africa within this time frame. And then Africa's population is also projected to hit about 1.7 billion in 2030. You need to plug into this growth. We see foreign investors coming in here every day. They know what they're seeing. Then we locals, we don't participate in our own markets, right? Because we don't understand it. And there's so much opportunity. And the stock market is actually a good place to participate in this growth that we are expecting. And then we have green tech and green energy, things like solar, hydro, wind, and geothermal infrastructure, electric vehicles, all of that infrastructure is also projected to grow over time. And you can have access to that both locally and internationally. We'll talk more about this in our coming webinars as well. And then we have digital assets, AI, infrastructure, crypto, and blockchain. This goes without saying. We all know now that there is global mainstream acceptance and adoption of these asset classes. They are now seeing, we now have governments going into cryptocurrencies. We have big institutions like JP Morgan and the likes going into it. So there's something there, right? And even though we are smaller investors, we can still benefit. A stock like Nvidia, which is based on AI, it has done multiples and multiples in the last in the recent years, right? So there's so much to gain from plugging into some of these key sectors if you join early. Now, the 4 P's of wealth, you start with purpose, which is why you are investing. Then you put a plan in place of how you want to achieve what your goal, and then you follow the process, and then you are patient. Emphasis on patience, because a lot of us want to double our monies overnight. That's when you then fall into things like Ponzi scheme, put yourself under pressure, and you fall into this, people that promise magical multipliers. They'll double your money, bring this or bring 2 people, you get this and that. You don't want to fall into those kinds of traps, right? So you want to be as cautious as possible, stay true to the process and be patient with it. Now let's talk a little bit about setting a goal and taking action, right? Whatever goal you set will depend on you, where you are. Do you want to focus on a goal that will build your net worth over time in the next 6 months? Do you want to just take a subset and say, you know what, okay, I'll focus on my emergency fund for now because I'm just starting out? Or you say, okay, I'm fairly comfortable. I can leave emergency fund. Let me go straight into building an aggressive investment portfolio that will be balanced as well, because you don't want to take undue risk, right? Or do you want to say, okay, no, I want everything holistic. I want to focus on, how I manage money, the income and the expense to asset swap. That will be where my goal will be on. This person on the screen has just said that their own goal is to increase their stock portfolio by 6 million in December 2025. And one thing about setting goals is that they have to be smart. What does smart mean? Specific, measurable, achievable, reliable, and time bound, right? So this goal that this person has set, is it specific? Do we think it's specific? I think it is, because it put a definite amount of what they want to achieve. Is it measurable? If they achieve it, would they know? How would they know? They will check the value of their portfolio and they will know whether they've achieved their goal or not. Is it achievable? Well, it depends on the person. You are the one that knows your situation and how much you are able to push yourself. At least we've learned that we can increase our streams of income. There's so much we can do to ensure that we push ourselves. And then is it reliable? And then is it time bound? Yes, it is. So when you set your goal, make sure that it meets all these requirements, and then you give yourself a key behavioral change. What are you going to do differently to help you achieve that goal? For this person, they said they will invest 1 million monthly in the Nigerian stock market and also read or watch content about investing every day to grow knowledge, right? So this is a key behavioral change that is going to help achieve this goal. Then the win condition, how will growth be measured? How will you know when you've achieved your goal? Is by the increase in the portfolio. So if at the end of the year, December, because this is a very good time, we're in June now, July, sorry. So this July, he will do 1 million. August, September, October, November, 6 months, December, 6 months. You should have done the 6 million if the person stays true to his goal, right? So, and you will know you've achieved it by what the value of your portfolio is by the end of the year. And then you should set something that is an exciting consequence or a reward, right? So this person has said that their own reward is that they will give themselves a holiday or a weekend getaway to donate funds. Oh, sorry. If they achieve it, they'll give themselves a holiday or a weekend getaway. But if they don't achieve it, they will donate the funds for that holiday to charity, because it has to be something that bites you. And if you don't have money to donate, then maybe you put yourself on fasting, or you do something that is going to pinch you, that's going to hurt you pretty much. So you set a reward that will motivate you, and you set a penalty that will hurt you. That way you ensure that, and you make sure you keep true to your word, right? And have an accountability partner, someone that will hold you accountable if you achieve what you said you're going to achieve, or if you do not. And then of course there's a timeline of 6 months. So I like everybody on the call to just take the next poll and give a commitment of what you are going to be doing after now. Where's the poll? What's one thing you will take action on after this session? One says calculate my net worth, create a structure for my money, start investing something no matter how small, track my spending and reduce liabilities, join a financial community like Thrive with Okiemute for accountability, or all of the above. Well, I don't know if you can do all. You might be a superman or a superwoman or something. So pick one or pick all, whichever. Uh, 5, 4, 3, 2, and 1. So I'd like you to take time after the call to sit down with these things and put it to practice, because what you oh, all of the above, 83%. Everybody on the call wants to do everything. You want to, wow, I'm impressed. 6% says they will start saving, start investing something no matter how small. 6% says track my spending and reduce liabilities. Fantastic. 6% says I'll join a financial community for accountability. And a whooping 83% says all of the above. And it's indeed achievable. We're going to meet again at the end of the year and we're going to check ourselves. What goal did we set? How far have we gone? How did we do? And I believe that we'll all have something positive to say at that time. Yeah. So in summary, right, we want to build wealth, build systems, not hustle, right? Ensure that every dollar, naira, pound, euro, whatever currency that comes into your account is deployed and is working for you. Invest daily, weekly, monthly, quarterly, whichever works for you, but ensure that your money is properly deployed. And then move to the point where you can earn money every day. See problems as payments in disguise, right? That's why some people say Nigeria is the best place to live, because we have a lot of problems that need solving. So if we scan our environment, right, we'll find a problem that we can solve. Like, I realized that a lot of people don't have this investment knowledge that I take for granted, which is why I decided to set up this community. I'm solving a problem, right? So think of, and I'm still going to solve a lot more. So think of problems that you can solve to help you generate more money. Focus on generating passive income. We've learned a lot about that. Learn the money language. Yes, this is one thing. People say, all these things, financial jargons, you people say, what is ROI? What is coupon? What is dividend? What is, if you get familiar with this, you would learn it, because English that you speak today, you weren't born with it. You learned English because you were exposed to it and then you were speaking it gradually. So if you listen to videos, podcasts, read books on finances, because why wouldn't you do it, right? It's like you don't prioritize the importance of it. If you don't do it, you think that money will take care of itself. No, you have to take it serious and start every day making sure that you're learning something about money. That way it then becomes normal, it becomes natural to you, and it doesn't seem like something that is unattainable. Then never invest in what you don't understand. That still speaks to knowledge. Also don't use confusion as a reason or excuse for inaction. Start from where you are. Diversify your investments. Don't put all your eggs in one basket. Manage money in ways that compound your freedom, not just your income. Move away from work, work, earn, spend, repeat. Yes, that was what a coach of mine said. Most of us, we work, we earn, we spend, and we go back to work. So that is the rat race. We are caught in that rat race. Work, earn, spend, repeat. Work, earn, spend, repeat. We want to move out of that loop, right? Which is why we're taking these concrete steps. Then average people trade time for money, while wealthy people multiply money with time. We all have the same time, 24 hours in a day, 365 days in a year, blah, blah, blah. What are you doing with your time? Are you just every day you go to work, spend your time there, come back, then they pay you, you spend the money, and that's the end? Put that money to work such that the money can then be working for you while you sleep. $100 a week for 11 years at 8%, you will have 100K at the end of 11 years. Just think about that. That's the power of investing and compounding. Then start from where you are with what you have to accomplish what you want, and then stay committed to connected rather to a wealth community. In closing, I would say this, that money may not fix everything in your life, right? But it can definitely make your life a lot easier. It can help you afford better things for yourself and your family and your community in general. And then it can give you more time to focus on your purpose, your health and your wellness, your hobbies, essentially your freedom. Imagine waking up every day at 5 a.m. to join Lagos traffic. And then picture another life where you can wake up and maybe do a bit of meditation, quiet time, prayer. Then you go out and jog on Lekki Ikoyi Bridge, or if you have a treadmill in your house, you run on your treadmill. And then you sip juice by the pool, and then you open your laptop at your own time and say, what am I doing today? Those are two different lives, right? You may not have it now, but it's something you can work towards. That's why I said money can give you essentially your freedom, time to do more of the things you love and help you to thrive financially, physically, emotionally, spiritually, and in every aspect of your life. So thank you for spending this time with me. I will encourage you to keep an eye in your inbox for follow-up materials and details about all our coming events and webinars. And then until then, I encourage you to keep thriving. So click on the link in the chat to join the Thrive community or to join the waiting list for the Thrive group coaching. You can also sign up for one-on-one consultation and then or you can submit any other inquiry that you have. And of course, follow us on all our social media platforms. Thank you. It's time for Q&A. Do we have any questions?
Thank you so much. Can I ask my question?
You can say your name and where you're calling from, then where you're joining from, and then you can ask your question.
Okay, my name is Rita Babalonga. I'm calling from Magodo, Lagos.
Hey, Rita, nice to see you. Thanks for joining.
Thank you so much. Though I came in late, I just want to ask a question because this has always been on my mind. In terms of dollar investment, what is the right approach for that? Because I saw you were citing examples with dollars. I'm located in Nigeria. How do I do this dollar investment in dollar stock or foreign stock? Is it part of your thriving with community? Thank you.
Definitely. Thank you for your question, Rita. I mentioned it in passing, right, about diversifying across asset classes and across currencies. In an economy like Nigeria, where we are exposed to a lot of exchange rate volatility, right, it makes sense to actually diversify your investments across currencies, especially as some of us would have expenses in dollars, like if you send your kids to school abroad or you travel or you have any, expenditure to do in dollars, right? It's good to have investments that can actually fund that so that you are not exposed to exchange rate risk at that time, right? So dollar investments, just like Naira investment, you can invest in fixed term instruments in dollars as well, and you can invest in equities or stocks as well. Yes, in this community, we're going to be giving you more information about how you could access those markets and how you could allocate your portfolio across those asset classes. It's good, especially like I said, since we're exposed to exchange rate risk, that you hedge or protect your portfolio against that kind of risk by investing some of it in naira and some of it in dollars. And there are platforms that you can have access to. So you can just fill the form and specifically state what you want, and we will definitely respond to you. Also on our platforms, we'll be sharing a lot of information about some of the opportunities in those markets. Rita, I don't know if that answers your question.
Yes, it does.
Thank you. Do we have any questions in the chat or any other questions? Can't see the chat for some reason. Okay, I can see it now. Do we have any questions?
Okay, I can just read out a question and then you can answer.
Thank you. Yes, please.
All right. So there's a question from Sonia, and she said, I haven't sold any land since I got into real estate, but I'm still pushing. What do you think I should do, Ma? Thank you so much. I'm learning a lot already.
Did you say I haven't sold any land since I got into real estate?
Since I got into real estate, yes, exactly. That's a question. But I'm still pushing. What do you think I should do,
It's a
Ma?
continuation of her question. If you read up, you see her first question, and then this one you're reading is the continuation.
All right, thank you so much. I think I found it, Blessing. So he said, good afternoon. Thank you so much for this. I joined quite late due to network issues. Please, what is the lowest amount to invest in the stock market? I'm a realtor, ma. What issues do you think I can solve outside selling land and making clients happy? And then, like she said, it then links to I haven't sold any land just yet. So I think maybe we can break it down and then you pick the first question. How do you intend to tackle it?
Thank you. So the first question is, what is the lowest amount you can invest in the stock market? The truth is, there is no lowest amount. However, some stockbrokers have a minimum. Some will tell you 5,000, some will tell you 10,000. So it depends on your stockbroker, right? I know with Meristem, where I work, with a minimum of 10,000, you can open a stockbroking account and you can start investing in stocks immediately. So I hope that answers that question. But of course, before you invest, please read the stock recommendations that the stockbroker sends, ask questions, find out more about the companies so that you're investing in a company that you're sure is going to grow and will do well in future so that your money appreciates and does not depreciate. Although you also have to have the understanding that stocks go up and down. The market can be volatile. So there are times when market goes up and there are times when it goes down. So you should only put patient money in stocks, money that you can afford to leave for say 2 to 3, 5 years without needing it. But if it's money that you know that you might need urgently, please do not put it in stocks. Put it in something that is more stable, like fixed income instruments, like fixed deposit, treasury bills, bonds, commercial papers. Those are a bit more stable than stocks. But stocks has the potential to multiply your money as long as it is patient money, and you can start with as low as 10,000 naira. Was there a second part of the question?
Yes. So the second part was where she asked about any tips that she should know since she hasn't sold any land. She's into real estate as well. She hasn't sold any land. Do you have maybe tips that can help her to be better positioned for more sales or for better sales?
I think selling is about value. A lot of people, from my experience, a lot of people are scared of sales because they are so focused on themselves rather than on the person they're selling to. There's no point selling something to somebody what they don't need. So you have to find out first and foremost, what do people need? Because if you bring something to me that I already need, chances that I'll buy from you is higher because it's something I'm looking for. So the minute you bring it, I'll be very interested in what you have to say, right? So it's about value. When you are a salesperson, see yourself as a value person. You're someone that gives value to people. So in terms of land, who are the people that need land? Then where are the good lands? You have to find out so that you're not selling something that is not good to people and you're not selling to people who don't need land. So you have to do your work, do your research. Where are the lands that are likely to appreciate over time? Lands that are located in places that are growing. For example, maybe you hear that the government is going to build a new road that is going to link up a certain area and open up that area, like this coastal road has done for Lagos, right? All the properties around that area have skyrocketed just because of the coastal road. So somebody who knew maybe years ago that this coastal road was going to come here would have positioned and bought that land very cheap. And then now they'll be smiling to the bank. So you should sell with knowledge, sell with intention, sell with value at the back of your mind. So that way it's not stressful. You're not forcing the sale. You are offering something that people need. You have to find out the people that have the money to buy this your land. Where are they? Where are they located? Are they online or is it real life? So all that positioning, all that research is what's going to help you be able to better position. And then are you working with already established realtors? Are you learning from them? Are you more so that you are not reinventing the wheel and struggling? Find somebody who is already doing what you're doing and doing it well. And then you can what's the word? Understudy them, or you can learn from them, benefit from their network. There's so much you can do, but I would, in summary, I would say focus on value, do your research, and then offer value that people need to them, and selling becomes easy. For many years, I worked in the bank and I was afraid of sales. I was really, really afraid. When they offer me any marketing job, I'll say, no, I don't want to do marketing because I cannot talk to people. I don't know how to, I don't want that pressure. But when I transitioned into investment banking and I embraced sales, I realized that it's actually easy because you have something of value that people need. Am I not the one selling investments to you today? I'm talking to you about investments. Before now, I would never have been able to do this. But I realized that when you have something of value and you find the people that need that thing, then it's easier to offer that value to them. So I hope that answers your question, Sonia. Thank you. Next question, please.
Okay, so I think we can leave it open to the house.
I see
I have there's
Natalie.
Natalie. Yes.
Yeah.
Yeah.
Yeah, I have a question. Should I just go ahead and speak up?
Who's speaking? Is that Natalie?
No,
Natalie there.
Zamaka.
Okay, after
Okay, so
Natalie, then
maybe yes.
Amaka.
Mm-hmm.
Okay.
Please say your name and where you're calling from, then you can ask a question.
Okay. I'm Natalie by name.
I don't know why I keep saying
Calling.
calling. Where you're joining the meeting from. Go ahead, please.
Okay. I'm joining from the UAE.
You're a bit
Okay.
faint though. Is
One
it
minute.
just me?
P4 is your gate number.
Let me increase my
Yes.
volume. Okay, go ahead, Natalie.
Hi. Can you hear me now? Hi.
Yes.
Yeah. Okay. So I'm Natalie, and I'm joining from the UAE, the United Arab Emirates. Okay. Maybe it's my airport. I'll remove my airport.
Okay, if Natalie is still getting herself together, maybe we can hear from Amaka while Natalie, we wait for Natalie to come back. Amaka, are you
Amaka,
there?
please, can you raise your hand so that we can unmute?
Hello.
Okay, seems Natalie is back.
Yeah, sorry about that. Okay, I'm Natalie. I'm joining from the UAE. Okay, so my
Welcome.
is I'm a low risk taker. However, my husband is the rugged one. Okay, and this question is actually from for him how I can advise him. Okay, because we are always having issues concerning this. He likes investing on this stock market. And each time he invests, because he's eager to make money, he's always making mistakes and we end up losing all that money. Me on my end, even though the money that I'm earning every month is not even up to 1 dirham every month, but for me, the fact that I can see my money there resting and that 1 dirham is on top of it and I can remove it anytime I want, for me, it's just enough for me. I don't mind how small, but let me just be seeing it and every time it's increasing for the whole year. For me, it's fine. Now, for my husband, he keeps investing money in that stock and he keeps losing. Please, what's your advice for me that I can tell him, please?
Thank you for your question, Natalie. I would like to say I empathize with you and I understand your pain, right? Because I have lost money in the stock market, in the forex market, in the crypto market. I have done all of them, and I have learned from my mistakes, and I've also gotten a lot of knowledge. So I'll tell you that the first thing is knowledge. Why a lot of us lose money is because we are doing it a lot of gambling. We throw the money in and we hope that it goes in our favor and we are able to double our money. The markets don't work on hope, it's knowledge. So the first thing to do is to get that knowledge. If he is investing in the stock market, which stock market? What are the companies in that market? You have to understand how companies work and what are the things that drive their performance, right? So a company, they have what they call the price to earnings ratio. So the company is trading at a specific price and then they are generating earnings at a certain level. When you compare that ratio, you are able to get the value of the company and it gives you an indication of whether that company is undervalued or overvalued. There are other metrics. There's dividends, there's earnings per share. There's so many metrics that you can track to project a company's performance. And based on that, you can then know that this company currently is trading below its intrinsic, I'm using too many financial terms now, its real value, right? The value is trading in the market is lower than the real value of that company based on their financial report. So you need to look at the company's financials and then project how you think that company is going to perform. So this is why a lot of people lose money because this analysis is not easy to do. But you have to start from somewhere, or you rely on the expert judgment of your, wealth advisor or your stockbroker or whoever it is that is knowledgeable in that market. And even when you are relying on expert advice, still go back and read what they have told you. Knowledge is power. That statement is not a fluke. Knowledge is indeed power. Don't, every time through my presentation, I kept saying, don't invest in what you do not understand. It's not gambling. It is knowledge. There's several types of analysis that people do in the stock market before they recommend stocks to you. So if you're signed up to a stockbroker like Meristem Stockbrokers, for example, right, they will tell you every week that these are our top 3 stock picks or stock recommendations for the week. And they will put the reasons in the report why they are recommending those stocks. Read it. Read it, try to make sense of it. Ask questions if you don't understand anything. Google, ChatGPT, they are your friends. Go there and ask questions. Find out. Don't just throw your money away. You've worked hard for that money. Don't just throw it away. So do your own due diligence, do your research, and then speak to experts. By the time you put all of this together, and you don't need to do everything at once, pick one asset class and say, this one, I want to learn it. Then when I understand this and I'm more comfortable, then I can move to the next one. Like that. You do it gradually. And over time, you'll find that you get more comfortable. So I would appeal to you to speak gently to your husband about getting more knowledge about the markets, about the companies he's investing in, and the timing of the investment. Because sometimes you can invest in a good company, but you went in at the wrong time. Because you have to know how to predict markets. Because there are a lot of macroeconomic factors that affect markets. So even though the company is doing well, but the economy as a whole, you have to still understand how the policies that the government is making is going to affect those your companies. Their policy around inflation, interest rates, exchange rates, GDP, how the economy is projected to grow, all these factors, they affect how companies perform and how the stock market. Also, investor sentiments sometimes, how investors feel about a particular stock. Maybe there's news that something is going to happen in a particular industry, and then you see everybody rushing in there, right? Everybody is just buying that. So at some point, it becomes irrational self. They then stop focusing on the fundamentals, which is the real reason that drives the companies, and they start focusing more on just the sentiments, the news. So you have to know the timing also. And like I said, it's patient money. So if you invest in a company and the stock goes down, and you have the staying power to hold on, if you wait and you know that this company in the long run they are going to do well, you would not lose money. But if you are in a hurry to sell, then you might lose money. So there are a lot of factors: knowledge, understanding the economy and how it affects the companies, knowledge about the company, and then timing of how market works. It's all about seeking knowledge. Me that you see saying all these things today, I didn't know it. I had to learn it. And for something as important as your wealth, I don't think it's too much to commit that time to learn these things. And thank God you are in this community now. So you can always reach out and we'll be very, very happy to support in any way that we can. Natalie, I hope I have been able to answer your question and not confuse you. Yeah, thank you. So any other questions? We're supposed to end at 12:30, so we have about 9 minutes more. Do we have any other questions?
Yes,
Yes,
let me
there are
ask
some
my.
questions.
Okay,
Oh, okay,
Amaka.
please go ahead.
My name is Amaka. I'm calling from Lagos, Nigeria.
Thank you. Welcome. Please go
Thank
ahead.
Okay, let me be as fast as possible. Okay, for someone that does business, because I know that all these investments is quite straightforward for people that earn salaries. So for someone that does business, and you have done your calculation, and you have checked most of the investments, and the return of investments cannot be enough for you to sort out your problems. Even if you plan, no matter how you try to plan the investment, it's not enough. So you rather put your money into your business. So even if you say, okay, let's take out a small percentage of this money and put in the investment, it's still not worth it. The proceeds that is coming out from the investment is still not, it's not the amount, the figures don't make any sense. They can hardly do anything for you. So somebody that has that mindset already and that has been moving with that kind of mindset, what kind of investment can the person do that will be reasonable enough for the person to say, okay, it's worth it for me to put my money there? Or are you going to advise the person to just put their money there as an emergency fund, not necessarily to take care of needs? That's my
Okay.
question.
Thank you for your question, Amaka. One thing we need to realize is that your business is an investment too. If you notice on the slide where I spoke about um asset classes and invest, I put business, a business that generates income. Remember when we said what are the assets that generate income for us, right? Business is one of them. So your business is also an investment. So don't see your business as separate from your entire portfolio or your network. Your business is just one. The What I would just advise that kind of person, since you already have a very profitable business that is giving you returns that is even way more than most of all the other investments that are available, you would then consider other options just for the purpose of diversification, because you don't want all your eggs to be in one basket. Because if anything happens to that your business that is doing so well today, what then happens to you? Right? So you can consider other businesses too as a form of diversification. For example, if you are somebody who your business is in the maybe food or consumer goods space, right? You might want to consider another business that is different and will not be affected by the same factors as food, right? If you want to, you might want to consider maybe like you see somebody like Dangote now. He started with rice, sugar, all those things. Then you see him going into cement. You see him going into refinery. Now I hear he's going into what's the latest one I heard? Yeah, he already has fertilizer. There's a new one that he just got a license for right now that he's going into. That is diversification. But he has realized that business is the thing for me, right? Nothing else can pay me as much as business. And I have a knack for business. I am good at business, right? I can put money in my business and generate 10 times my revenue. Which investment wants to give me that? Or if I put it in investment, it means I'm putting it in the destiny of someone else to manage for me. So if you are good at business, it's a blessing. But how do you diversify such that you are not exposed to only one sector? Because I attended a seminar in London recently where Obi Kubana was speaking. And he's into hospitality. That was his main business. And he was doing fantastically well. He had hotels, nightclubs all over the country until COVID hit. And then he realized that this one business is not the way to go. And he had to go back and rethink. And now you see Obi Kubana doing headphones, see him doing drink, you see him doing, different things. He's even doing content creation on top. It's all about diversification. So don't be limited in, it must be fixed deposit or treasury bill. Investment is something that you put in the money and it brings in more than what you put in. It generates revenues that exceed the money you put in. So if you put it in a business and it generates revenues for you that far exceeds all the popular investments that you see around, then you are doing well as well. But just ensure that you are diversified. And then that emergency fund that you spoke about is also a good thing to have. But most business people will tell you that money that is in emergency fund, if I put it in my business, I will make times 100 of it. So why will I be leaving money there? Even my coach, Grace Offore, says this. She says, I don't hold cash. Once I have any money, it's going into one business or one property or one thing or the other, right? So the most important thing is that you are deploying your money into profitable ventures that are going to grow your net worth at the end of the day. And then you are not invested in only one sector. You are fully diversified. Amaka, I don't know if I've been able to answer your question. I hope I have. Any other questions? I don't know if Amaka is still on the call. Do we have any other questions before we round up? I think we still have a
I'm
few
here.
minutes.
Okay, thank you very much. I heard you, but I just wanted to move away from noise before I say
Okay.
what I wanted to say. So, in the future, do you have any personal advice for business owners with this peculiar challenge that we can key into, or any peculiar investments that we can key into?
Definitely. Like I said, you can just fill the link. Chama, I don't know if the link is in the chat right now. It should be. And whatever request, or you can send us a DM, you can reach out to us with your specific needs. We have one-on-one consultations. But yes, we'll share general information across all our platforms from time to time. Or you can still reach out to us for one-on-one consultations, and we would be very, very happy to support in any way that we can.
Thank you very much.
You're welcome. Any final questions before we round up?
So we have two questions. One is from Blessing. She said, since you're working with Mary Stem, is there a way to have access to a stockbroker who can help out with the issues of setup and unclaimed dividends?
Yes, you can send an email to contact@meristemng.com with whatever your inquiries are related to Meristem, and you would get a response. Or you can reach out to me privately, and I'll also be happy to help.
Okay. So next question is I think that's sorry, just to speak to that. I mean, that's a good place to join our community so that you can now get access to ask the questions that you have. But moving to Sonia, Sonia was just reacting to your response to her question, and she said, "Thank you so much. Please, who can I reach for the stock investment plan? And please, how do I look for the people who need the land I sell? Yes, I work with an established company, and the land we sell, they have value because of the recent government construction. And also it's a student area, so AAU EPOMA to be precise. So how do I reach the people who need what I sell? Thank you so much. This is my last question.
Okay, I think I answered that when I was speaking earlier. Like I said, social media is your friend. Put yourself out there. Get in the community of established realtors. Leverage on their network. There's no point trying to do it on your own. Network with people that are already doing it. And don't be afraid to speak up wherever you go. Does everybody in your community know that if they need land, they should reach out to you? Because I told that to somebody in my team the other day. Are you the go-to in because of course for us our sector is investment. I say, are you the go-to investment person when people have questions or concerns regarding investment? Do they think of you? Meanwhile, you are in their network. You go to church. You belong to a family. You have friends. You whatever network, school. You find yourself. At every point in time, make sure you bring it in the conversation. There's this land here. The price was this. It's supposed to go to this because of the government road. You present the value to people. Post on your status, go out there and let people know that if I'm thinking of buying land, Sonia is my plug. get known as the plug in your networks, and don't sit at home and think that the opportunities will come to you. You have to be out there. You have to put yourself out there. I know it's uncomfortable initially, but the more you do it, you get more comfortable, and people will know. You will find that people start reaching out to you. Like right now, I don't need to reach out to people anymore. People reach out to me every day. Oh, I'm thinking of doing this, or I have a friend that wants to do this. How can I do this? And the businesses just keep coming. That's because I've put myself out there as somebody who is knowledgeable about investments and is ready to assist anybody that needs help with investments. So I would advise you, make sure you are known as somebody that can give people value with regards to land. Find out about the land, do videos and put them on your social media and let people know about what you're offering. So that's my advice. Thank you.
Yeah, I think, can we take one last question?
Yes, we
Jackson's
can.
hand is up. All right. So, Jackson, please, you can ask your question.
Hello, good morning, Ma. Thank you so much. Hello, am I being heard?
Yes, we can hear you. Good morning.
Morning. Okay, I'm so glad to join this webinar. Rahila Jackson. I joined in from Abuja. Okay, I
Okay.
got to know about it through Madam Grace Ofori, and I'm glad to
That's
be here. Actually, I've gained a lot of knowledge this morning. But I'm also glad also to find out that you work with Meristem. I wanted to find out what's the difference between this Wealth Buddy and the Meristem app itself.
Mary Trade.
Meritrade, yes, thank you.
Okay. Mary Trade is strictly for stocks, trading stocks, buying and selling of stocks, while Wealth Body is for any other kind of investments like treasury bills, mutual funds, fixed deposits, savings, any other investments you're interested in doing, you can access that through Wealth Body. But Mary Trade is purely for stocks. So that's the major difference, but they are owned by the same Meristem group. Does that
Okay,
answer your
recently I was
question?
thinking, yes, I was thinking, can I move? I have this Optimus app. So I was thinking, can I switch to the Wealth Buddy? Is there a way to switch?
For
Or I
specific
have to go and
questions like that,
sell?
yeah, there's a way to transfer your shares from one stockbroker to another stockbroker. It's called intermember transfer or something like that. There's a form that you fill
Okay,
and you go through the KYC and all of that,
okay,
and it can be transferred. But if you have specific questions, you can just fill the link and tell us what you exactly you want, and would help.
all right. Thank you so much. I'm grateful.
You're welcome. Any other questions before we round up? I think we've done well with time. Thank you, everyone, for joining the call. I have thoroughly enjoyed myself and I've learned so much. If there's any question that we didn't answer, please, please, please just fill out the link to our form and, reach out to us and we would be very happy to help you. So thank you once again for joining the call. Look forward to seeing you winning. We'll likely have another webinar very soon, but you'll be informed. We'll send out all the notices through your email and also on our social media platforms. Thank you very much and enjoy the rest of your weekend. Until next time, keep thriving. Bye.